The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more do we go into the breach, dear friends.
The following takes place between 2 p.m. and 3 p.m.
That's right. It always happens between 2 and 3 p.m. every day. Anyway, as we start the day off, we are once again into a market that is slightly higher. What is different about today is volume has picked up from yesterday, about 500 million shares more than yesterday. And, you know, we're only up about 8 points, but we're still probably going to be about a 1 billion, 1.4 billion. Depends on if you want to be conservative or not, short by the end of the day. So we'll continue watching out here. But, of course, fund money coming in, and we're going to have that fund money coming in through tomorrow. And the question is, will the Fed members that are speaking in the next day or two drop a chalupa in the punch bowl? I'm mixing my metaphors even better than I have ever before. Anyway, it is a day. We do have some decent volume. We started seeing a lot of short squeeze yesterday, and we're starting to see those most highly of shorted stocks squeezing again today. The question is, will we have enough volume to break out these previous highs or even go test them? And that's going to be a very interesting proposition over the next couple of days. But I suspect we are going to really either take off or fail probably in the next 48 hours. And so we're getting very close to what's going on. Of course, the dollar index is back on its horse, giving it the whip, coming around the home stretch, headed for 100. It's up 33 cents today. It was up a little bit more, but solidly in the 97s again. And my guess is that it's going to head up to the 100s, and it's probably going to head up on the 100s on discussions with and about and by the Fed Reserve chair people of the of this next few days. So we'll be watching it very closely. Maybe they'll come in a lot more dovish. Maybe that's why we're seeing a little bit more volume today. But my guess is that they're going to have to be incredibly careful. Every day we get more earnings, stocks that are headed down. The stocks that are headed higher on volume and, of course, even the revenue numbers and numbers that are very much less than 6 months or even a year ago. So, of course, we're probably looking at a 22 or a 23 on this round for our price earnings ratio. And that makes stocks extremely expensive. There's a handful of those stocks that aren't, that are in the 15s or something. And those things are kind of bouncing a little higher. There's some stocks that there's no way to put a price earnings multiple on, like Amazon. But as we go through the day out here, it is going to be very interesting. Of course, gold is telling us that the inflation fears are probably on the wane. It's, off 2% today? Was that what I saw? I think that was 2%. Anyway, just so I can have something up here and see. What do we have out here? Yeah, off 21 bucks at 21.1460 for the last quote. And for those people that have known for a while, I've not been rather bullish on gold, not because I didn't think you could make any money in the short term, but because I've been waiting for the long term. And I thought that we were going to get one more washout to the downside, and I don't know exactly where that's going to be. Heard a lot of people talking about targets like 875, but I mean, we'll have to look in the next couple of days, but this is starting to look awful like a false breakout to the upside, which means that we will see a great deal more downside in gold. And for me, I'd like to buy gold over the next 2 or 3 years, as I think that the Fed and the rest of the countries with their easy money policies will blow up in their face. Just at this particular time, we are in deflation, and I think that is going to have to run its course, and the Fed's going to have to yell uncle with the EU and the rest of the world. We've taught them a horrible lesson. I guess maybe we learned a little bit of this bad lesson from Japan. And, of course, everybody, the Keynesians all said that, of course, the 1930s were all about not the Fed doing enough instead of doing the right things. And, again, I guess Andy wrote a nice article over the weekend. I guess it's on yesterday, Seeking Alpha, about the quote with Groucho Marx about politicians finding trouble everywhere, doing the wrong thing, and suggesting the wrong remedies. To me, economics or economists are just that. They're politicians that don't run, and of course, consistently wrong. There's never so much fun that I've ever had as watching Nassim Taleb rip Fed people and economists to shreds by what they've said, and that is that they are scientists that don't use any of the scientific methods. There's a handful of ones that are fairly good. We've talked, of course, about the one that actually paid people to trade, got real traders, did other stuff. He won a Nobel Prize in 2002 or 3. But for the most part, they guess wrong. They re-advise. They're always behind the curve. When they're adding stimulus, they always add it way too long. We haven't ever found one of them that thought that it was a good time to pull out a little early. Guess I'd have to say that a different way. But anyway, it is that. And, of course, that's it. We've got questions already, and we'll get to it. We've got one. You can email me at path@tfnn.com. But I think we're getting very, very close to a major break in these markets, and we'll talk about it in the next couple of days. Not going to happen in the next 5 minutes, I don't think, but I think we have at least the beginnings of the end, probably in the 8th or 9th inning of a move out here. Now that, we could see something change in it, but to me, especially the volume today, and the way that the stocks are moving, are people leaving stocks that are highly short. And, of course, that always opens up a trap door below where there are no natural buyers when the market comes down. We also see a VIX that is telling me that it is probably cheaper to buy options now than it is to actually own the equity. At least a better deal. Lower risk, and of course, sometimes even a bigger reward, especially by a percentage basis. And we'll be looking at that. But options are literally telling me that there is not a great deal left on the upside in most of these markets. And as we said last week, a lot of what we were looking at in the last few days tends to make me think it tends to make me think that we are getting very short for the amount of time left that this market has to look at it, everything as blue sky. In the meantime, let's get this party started.
And it's all just a little bit of history repeating.
On this day in 1948, the day after Harry S. Truman defeats Mr. Dewey. And just to tell you a side note, I could ride, where I grew up as a kid in the 70s, I could ride my bike to his house, and did. And later on, traffic became too much. But his boyhood home was a mile and a half from me. Knew a lot about him. Knew about Truman. He was all mobbed up when he came out of Kansas City. There was a kind of the equivalent that you see in most of these big cities. It was Boss Pendergast in Kansas City. And the funniest thing was, of course, they'd always have a thing called concerts in the park in a place called the Plaza, which is kind of mid-downtown Kansas City. And what this was a stream that literally was 4 inches wide, 99.9% of the time. And they paved this thing 50 yards wide, 3 feet deep with concrete. And, of course, old Boss Pendergast got it all out. Anyway, Truman came out of that area. Didn't seem to be too mobbed up. At least a lot of people didn't think he was. Ended up going, of course, to the House and then becoming the vice president after that. But, of course, on this day in 1948, the markets didn't like it at all. He had basically, he kind of espoused a policy that had gone back to the 30s, which is we're not going to be interventionists. We're not going to worry about what the Russians are going to do. And, of course, pretty much the height of the Cold War kind of against the grain of what most people were thinking, which is that Stalin literally was thinking about how he could take over the world, and he didn't think that we had much of a spine, mostly because of what Truman was saying. So the market slumps by about 4% to 108. God, I can't even say it. 182 on the belief that Truman will be too soft on communism by November 10th. The Dow is down almost 10%. And, of course, this set up a lot of things, but you've got to – I don't know what politicians think they get by telling everybody which cards they have. They're playing poker against people that are very good at it. Putin and others. At that time, of course, Stalin. And, of course, they wave the white flag around as a badge of honor. I don't think it's very smart to let everybody know what's on in your cards. He came back, led a very quiet life after his presidency, and I think a lot of it had to do with him figuring out the rhetoric of politics when it meets the cold reality of communism or socialism. As many people say, socialism is just communism sold by the glass. But on November 10th, the Dow lost up to that 10%. We'll be back in just a minute, start talking about other things.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Pesavento, Thinkorswim, David White, Andy Hecht, and Daryl Martin in crystal clear, high definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Up 10 points on the S&P cash at 2.7 billion shares on the New York Consolidated Tape, which is good, but probably not enough to get us up and over the highs. So we'll have to see how volume comes in the next couple of days. As we said last week, Trim Tabs had a lot of cash coming in for the quarter. And, you get this is one of the reasons why September tends to be kind of a down month and November tends to be usually an up month. And that just is that cash comes in for the quarterly IRA money. And, we've got a couple more quarters now where the big money won't be coming into quarterly money. The monthly money will come in. But you've got a pretty good little chunk of cash coming in here. And the question is, are we going to find a lot of people that are going to and be willing to buy at an average of 23 or 24 or 25 on a PE multiple up at these highs, or whether these companies are really turning themselves around and that earnings part is really going higher? With the amount of people that have been guiding down, it's very tough for me to believe that they would. Now, yesterday, we talked about many things. I think I had it. One was I was looking at the new games coming out last week, and I kind of saw a lot of stuff going on in this computer gaming sector, and I read it wrong. Activision, of course, bought King Digital today. I've been thinking that maybe Zynga, and I had a few plays when I thought maybe Zynga was getting ready, Z-N-G-A. I think it's up 8 cents, not a big deal out here. I thought maybe Zynga would be the company that people bought out. I was wrong on that. But I just thought, a lot of games are coming out. The movement in this area was going to be it. Maybe in hindsight, I could have seen it. When I was talking about that yesterday, I was really looking at these game companies that look like they're going to do well going into Christmas. And of course, a lot of these things, the games keep getting much better, and they keep spending a lot more money on them. I think we've got a couple more games where the budget is in the $300 million plus range that are coming out in the next few weeks for computer gaming and for Christmas. A lot of people think, well, you pay $60 for a computer game. That's a lot. I saw some data also that showed that the amount of hours that people are playing these games is on the neighborhood on average of about 200. So if you think of a movie at $10 for 2 hours, probably not a bad deal if you're figuring it out by the hour on these games. Saw a lot of people talking today about Candy Crush still being a great game for smartphone addicts, especially in New York, where you can ride the subways and do other things other than drive your car, which is the rest of the world, or at least the rest of the United States. But that is it. Anyway, we had somebody in the den ask about BP and some other things. Let's see if there's anything else I wanted to get to. I think that's it now. There wasn't a lot of news out here that really made me think that there was much going on in the market. So we'll get to stocks pretty much right off the start of the show. Again, a great day to give me a call at 877-927-6648. Email me at path@tfnn.com. And, of course, you can post a message in the den, as our folks did. Now, one of the things you should be looking at, too, are confluence levels on the way back up. Now, BP, I've been waiting for this confluence level to hit, and we are basically, about 50 cents underneath it? We've got $38.57 to $38.31. And this confluence level looks like it's probably going to be pretty good. So if you were long BP, my original business plan for trading this would have been being out here at this $38 level. You're going to have pretty strong resistance at that level, but you got about another 50 cents. Volume's okay today, but again, it's not huge. Does it consolidate somewhere between maybe 36 and 34, maybe 35? I think it could. You've got a nice congestion range on 2 days, which is the 13th and the 20th of October. Both of those days, the lows are in the low 34s. So, you could be playing around in this level for a while as this thing consolidates out if you think it's going higher. If I was a betting man, or if I thought about being short some of these stocks, you're getting extremely close to those levels. And of course, very, very small risk.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new Market Safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let falling markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. And being interrupted by the peanut gallery apparently today. Andy Heck, of course, is going to be on today. We've got a little IM thing going on out here, trying to come up with a title for some of his articles this weekend. I've been adding a few here. Gold is so ugly, even Ripley won't believe it. Another one I came up with is gold is giving Freddy Krueger nightmares. If you have a great article about how ugly gold is, you can email me at path@tfnn.com or post it in the den, and we will do that. Boy, we've got a lot of interesting comments, but we need a title there for Andy. So if you've come up with as bad as gold looks today, let us know. It's off $20 today at 116, but what a ride back down, kind of like the ride we have up here today. Anyway, as I said before we left, make sure if you're looking at these trades that you're looking at confluence numbers, because a lot of these are popping up in some of the different setups that we have in the market. But we'll take a look at it. But yeah, you've got, you'd probably need a great deal to change out here to make me think that this was probably anything more than a bounce in a downtrend for BP right now. When we look at crude, I mean, it's up $1.78, but to me, it's just in this range of about $43 to $50. And maybe the bounce out of today is probably just a little, not too many people being short this thing. My guess is it's going to be quiet and down in that $50 to $43 range for a while. Maybe it breaks below that $43 range, but for me, I just don't see anything massively changing in the next few months to change and get it out of that lower range. We talked a little bit about maybe even Friday and the week before Friday that I was thinking that crude had become the fear commodity for the weekends. And of course, this is a weekday, but again, it'd be very interesting to see if that doesn't play out on this Friday. And that is what commodity do they take home as a hedge into a long, not a long weekend, but a weekend. And we'll see on that. Anyway, we've got lots of stocks going on out here. Let's start taking a look at them. Of course, Apple's headed back up. Now, Apple is one of these stocks that's had incredibly light volume since its earnings date. Had a little pop up, but you got to tell you, this is what I see a great deal of, and that is very light volume in several of the equities that you would think as they go back up would certainly need more volume. You got a high volume low that was never really tested. Maybe that was kind of a blowout. Could go Apple get back up into that 126 to 131 range where it gapped down and started all this commotion? Going into the end of a year, a lot of people are talking about the, of course, the Apple TV. I just don't see that much there. I think they're overselling it, kind of like they oversold the watch. In fact, I don't see. When's the last time someone talked about the watch? I mean, it's been pretty quiet. I mean, outside of people talking about the stock market itself. If you left that, turned off CNBC, only watched regular channels, when's the last time someone brought it up? Or I've seen a couple of TV shows where there's been some commercials in it. And other than I really love the girl that's in the commercial, it still wouldn't change my view on it. But what do we have out here? Let's actually get a little bit more. Let's get this down to about a year and take a look at it. We've got a little bit more of a complex pattern setting up here, but is the energy bad? It's not horrible, but what really kills it is the last 5 days out here for me. You got 69 million shares. When we go back to the 27th, you pop up, you got a gap with 85 million shares on the 28th, but then we go the 29th at 51, 49 million shares. Next day, 32 million shares. Today, 30 million shares. And I think you're just going to need a great deal more. That gap down occurred on the 22nd of July, and that was 115 million shares. So we have a pretty good indication at least some of these stocks coming out of earnings weren't running away on the backside. Does that mean that Apple's going to crack? Probably going to be the last to crack, actually. Everybody's rallying around a few stocks, and it continues to make me, think about the four horsemen that were constantly talked about in 1999 as we turned into 2000 and a top was made in the markets. Again, see, do we have anything else out here? Okay. Let's see if there's anything else. Things are scrolling by in the den. Wanted to check my email real quick and see if we have anything else. Okay. Got a question. What do I think of the action in Maxwell? Like the company, I hate the absolute lack of volume. And today, that is the problem. And, you're getting a little movement out here. But you need to get into the millions of shares traded, and we're not. I mean, we're going into a candle that had 1 million shares, and we're 400,000 shares today. And that is the problem on a $6 stock. If anything goes wrong or right, you're probably $2 up, and you're probably $2 down. And that is the real problem out here. If this market turns on you, there just isn't enough volume in this stock. I was watching this thing at 10:30 this morning, I think, or 10. It had like 15,000 shares, it's just so lightly traded now that it would be hard for me to say, put this in my newsletter, not because I don't like the long-term possibilities. It's just the short-term volume on this thing is just horrible. Everything back in here. I mean, you got lots of days that had less than 200,000 shares. And one of my cardinal rules is I want to see a stock that continually has over 300,000 shares. Below that, the statistics on getting a major surprise is very tough against you. But the action's nice. And I like it long term. It's just I think we're probably going to get a pullback in the general market. And with this light volume, it scares the bejesus out of me. Let's look at some other stocks here real quick and see what else we have going on. I don't know what happened out here. AECOM. ACM is the symbol on this. Coming back into, like I said, a lot of resistance on a lot of these stocks. ACM is one of those. This thing really did its downward move after kind of a sideways consolidation that started on the 27th of July, went into the 10th of August. Then you kind of had a big day where the thing opened lower and people bought it anyway. But kind of 4 million shares on that day on the 11th of August. You get to the 12th and this thing's down again on 6 million shares. Finally made its way down to $24.04 on August 24th, as a lot of these stocks. And it's kind of been meandering its way back up here. But boy, I tell you what, I don't like anything that has a glide slope as this does from the volume starting about September 24th. They're just very, very light out here. Let's see if they've got earnings coming up. November 10th. So you got about 7 more days. So a lot of these stocks you couldn't really play unless you want to play earnings on them. But not seeing a lot of juice come back in them. And those are probably where a lot of the surprises are going to come from in these. Let's take a look. I don't know why. I went through all my stocks today, but it looks like there was a bunch of them that I didn't get. I'm not exactly sure why. American Eagle Outfitters, a nice little pop today. And of course, we've been talking at the very beginning of the show, and that is these stocks with huge short interest are having some moves. I didn't see the news on this, so I will look into the headlines out here for us and see what we've got. Preliminary earnings beat. So we'll see what they had to say. 34 cents a share. Top's company forecast 28 to 31 cents a share. Okay. So nice little pop out here. You got 10 million shares. That's about what you've had before on non-earning days, going back to September 3rd high, 10 million shares. You had 8.6 million shares on September 21st. You had 12 million shares on September 16th on the downside. So I'm thinking that a lot of these stocks are in this consolidation phase. I don't see a whole lot going on out there. I don't care about moving averages. Do they have debt? And they got a little bit of cash. They handle that. Yeah. But there's a lot of reasons to like it. The reason I can't be in it is a stock that doesn't have the kind of volume that I need right now is incredibly scary, because there's a lot of potential potholes in this market, and that's it. If you're willing to accept that kind of risk, more power to you. The downside, of course, is that if you get any kind of news that's bad, there's going to be no getting out of it unless something else happens. The volume picks up on it, good on you. But right now, it just scares the bejesus out of me to be in a stock that, the thing probably should be doing about 1 million shares with the kind of moves it's got, and it's not. It's doing half that, and that's got to scare me. What else is out here? Still love the company. AK Steel. This thing's in this trading range. Volume is really needed about 8.3 million shares. These steel companies kind of thought that maybe these things would start coming off the bottom and start getting a little bit more juice in them if the market and the economies were truly turning around. You know, maybe you get back up to 7 million shares before the end of the day on AK Steel, but it doesn't look to me like a runaway. Now, probably the most interesting thing is, of course, gold getting hammered as it has been, down 19 bucks right now, and the gold stock's holding up a little bit better. And I don't know what that actually means. Of course, you've got to put that against a backdrop of the dollar index, which is trading out here at 97.25. This thing got up to 97.48. So it's been kind of quiet since then, up 33 cents on the day. My guess is the hard work for the dollar is already behind us. And what we're going to see now is this probably nickel and diming up to 98, which before has been kind of a place where a lot of shorts in the Forex get in there and start selling dollars. But my guess is that now we're probably looking either at the Fed making a big announcement and the thing breaking through and headed up to 100, and or they say nothing and the thing just kind of nickels and dimes its way to 100. I think you'd probably rather see the thing just rip the Band-Aid off and go up to 100 and test it and not have any volume if you're bullish on gold. The nickel and diming thing can continue on to maybe 103, 100, maybe 102.5 on the dollar index, and that is where your problem comes. So if you are bullish thinking gold is going higher, you'd probably want this thing just to come off and give you an opportunity to buy at lower prices. I think if it nickels and dimes, it may not stop for a great deal longer than just really moving up. We're still under 3 billion shares on the New York Consolidated Tape for the day, with 12 minutes left in the show, or actually in the hour. So we're probably going to come in at about 3.8 to 4.2. As I said, I wanted to probably see, like we've had before, somewhere in the range of 5.0 to 5.5 billion shares to break out these highs. And I think we're probably going to see decent volume in the next couple of days. But we're going to have to see what else comes up. Up 30 points on the NASDAQ as we speak, too. But anyway, yeah, the amount of gold holding up fairly good. Way, of course, the home away company. This one, recent IPO, but it's been around for a little while. You know, this thing did peak out with the 2 million shares, but come right back in the trading range back on the 26th of October. Now we're just kind of coming back up through this, about 800,000 shares today. And I'm kind of looking at this and some of the other stocks as a proxy. We'll look at that. But the one that I wanted to look at out here, I don't know why it's not in this list, is A.O. Smith, again, from yesterday. So we'll figure out how to find that guy. Or is that AOS? We'll look at AOS when we come back. But probably telling us a little bit about home building when we come back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. Of course, we got Tom O'Brien for the next 2 hours and Andy Heck in the 5 o'clock hour. So maybe he'll enlighten us on gold or the lack of gold. But we'll think about that a little bit. Wanted to talk about A.O. Smith, which, of course, is the water heater company, and they make a lot of plumbing stuff. And I think it's kind of an interesting chart out here, mostly just because we see the spike back from July 23rd, and that is a great deal of Goldilocks. 1.9 million shares from that July 23rd. Just when we look at the volume in the last 4 days, 925,000, 700,000 shares, 600,000 shares yesterday. Today, 443,000 shares. Starting to see, a lot of these stocks looking fairly thin at these highs. And of course, some of the other stocks that you think should be rolling out here and rolling higher are stocks like CRM. We've talked about the last few days. Thing tried to poke up against yesterday. Never really had a lot of volume. Today, you got a lot of doji out here. When we look at the stocks that are out, a few of them out with earnings. Some of them are up a little, some of them are down a little, but not a great deal happening. Mosaic, of course, it kind of up to its 50% retracement level. Volume, not that exciting on decent earnings. Then, of course, we've got some of these stocks that are really getting hammered. And I continue to think maybe there's something more to this Avis budget rent-a-car than we've seen today. Of course, it's down fairly extensively, down 10% or more throughout the day. But this thing is one of these stocks, and this is a good example of distribution and being able to run people out with short interest. You had pretty much everything you were looking for. This thing was in a lower trading range. It broke out above it. You needed about 5 million shares. On the 7th of October, you had 2.1. You had 3.3 million shares on the 8th. Then this thing just goes sideways all the way into earnings. Fairly narrow trading range. They pop it going into earnings. And, of course, a lot of people, we're just on the wrong side of this. And if you shorted it just at the bell, probably feeling pretty good about yourself today. Unfortunately, operators are doing this a lot more than the market would suggest for what we have. But again, continuing to be a problem. We brought up Cisco the other day, both Ciscos actually, so I will talk more about this one. But this one seemed to be the easiest one to look at in the fact that it was testing its August 13th high, $29.20, went above it on the 26th of October, had half the volume, 32 million shares compared to the 61. Now we're just seeing these light days, pullbacks out here. But as we said, just not a lot of drive in any of these stocks. But, you know, big volume in the markets. And I suspect I'll look at it tonight and we'll talk about it again tomorrow. But I think it's back to these markets where you've got a lot of volume. It's being driven by high-frequency traders back and being very active in the market. When we look at these stocks that should be breaking out with lots of volume, a handful of them, yes. Most of them, no. And that makes me pause. As the song says, things that make me go, Well, I'm going all the way into tomorrow. So when you can, not when you have to. We'll see you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.